Welcome to the Grow Your Money podcast, where we're on a mission to change how we talk about money. Our fireside chats are the heart of our show, bringing the energy and excitement of in-person events straight to your ears. We aim to connect you with inspiring voices and stories that matter, sharing relatable experiences and insights that will transform your financial life. Everyone deserves access to practical financial knowledge, so we're making money conversations relatable by inviting guests from all walks of life to share their real-life experiences with money. But this isn't your typical money show. We look at the emotional, psychological, and cultural factors that shape our relationship with money. So hit subscribe and join us for another episode of the Grow Your Money podcast.
All that while we prepare for the question and answering time. So now is the moment to use that chat box. If you've got any questions you want to ask Stephen, remember you can also raise your hand by clicking on that raise button, and then we'll give you the turn to speak. I can see people already typing. So maybe while they do that, I'm going to use this chance that I've got the microphone open and I ask you, Stephen, about any specific helps that might be there. Are there any like government schemes or any specific, government help or initiatives that you would recommend for first-time buyers or individuals with some unique financial circumstances?
All right. So apart from the lifetime savings account, if you are under the age of 40, that obviously benefit everyone and anyone, regardless of you are British citizen or you are not British citizen, as long as you have the right to be in this country, that benefits everyone. So that one I would definitely strongly advise anyone under the age of 40 to tap into. And if you're over 40, tap into the ISA or other sort of like saving platforms. So of course there is a lift scheme that could all these schemes out there as you have to meet some certain criteria, but we have a number of them. You have Help to Buy, that's no longer in Scotland. You have a lift scheme, you have a First Home Fund and other schemes, but the help is out there. It's a question of, do you meet some of these criteria but there are abundant. There is shared ownership, shared equity. The government, pay a certain proportion, takes a percentage of your property. This is the Help to Buy. You have the lift scheme and some other, depending on your circumstance, and we can dig right down into which one is more suitable. But everyone qualifies for lifetime cash, lifetime savings account, individual savings account.
So a lot of them. Zaina asks, can you get a mortgage even if you are on universal credit?
It's an income. We just need to review holistically your universal credit for how long is it going to continue for. It's something that we can look at. There are lenders that we consider that, but subject to an overview overall of the situation and what else is available.
Someone is asking, any thoughts on how to, this is more of a guidance, right? On how to raise enough for the deposit, especially for someone over 40s.
Any thoughts? Well, start saving as early as possible. How can you save? You can only keep what you have, right? So you can only keep what you have in the nutshell. How can you, and I will tell you this as well. There are lenders that we accept gifted fund, if you don't have the whole money. And in fact, that reminds me, there is a particular lender in the market right now. If you don't have the money, if you don't have the savings, again, you have to meet other criteria, like you are currently renting. right? My tongue is doing something else. So you are currently renting, and you've been renting for more than 12 months also, and you have to meet criteria like you are British citizen or you have indefinite leave to remain. You meet other criteria, but there is a particular lender in the market right now that offers 100% mortgage, which means you do not need to bring a deposit. You do not need to bring any savings of yours, but there are other uh, conditions attached to that, as aforementioned. And also, you cannot borrow more than your monthly repayment can never be more than what you are paying for rent. Okay, so if you meet the criteria, you can go for a mortgage with them. You cannot be paying £500 for rent, and then your mortgage is going to cost you £600 a month. But there are other products that could meet people that are struggling to raise the fund, but you need to meet criteria, specific criteria.
Mm. And then what is the minimum age for a LISA?
That's minimum age is 18. 18 to minimum age is 18. You can open a lifetime lifetime individual savings account when you turn 18. 40. Yeah, it must be before 40.
Until you are, so it has to be before 40. Yeah, you mentioned that earlier. And then in terms of insurances, if you can clarify the insurance products, does one have to have a mortgage first?
Sorry, say that again.
So the question is, for the insurances, does one have to have a mortgage before applying for insurance, or looking at insurance?
Insurance is very close to my heart, and I started my career just purely doing insurance because there is need for it. Not for the insurance, of course there is need for it, but the education that goes with the insurance. You do not need to have a mortgage to have insurance. Everybody listening to me, you are in the UK, you live in the UK. I believe most people are. You need to have some financial protection for you and your family. Of course, it's not one size fits all like every financial product. Same with insurance. It has to be tailored. What are your needs? What are your requirements? That dictates what sort of insurance you should have in place. Answering that question directly, you don't need to wait till you have a mortgage before you take out life insurance, critical illness cover, which is, of protecting your salary. You don't need to wait for mortgage before you have those insurance in place.
Thank you. So someone is asking, can one use a pension as a savings pot to help pay a mortgage?
Pension as a saving, so wait, I didn't get that. What was it? Can you use pension? If it's pension, of course, you're not going to have access to that till you are in at least 55 years before you can take a proportion of that. So if you want to take out some of your pension at that point, at that age, to use as a deposit to buy a first property, it's your money, right? It's your money. We just need to know that we find the right lender that will take that. It's a pension pot. You want to take some of it, and which I believe you can access until you are in the 55, at least 855, some of it anyway. Yeah.
And then how about, well, someone is asking, how about if one has adverse credit?
Okay, this is the beauty of broker like myself. When I hear things like this, not because you are not asking because you have an adverse credit, but this is what makes this job worthwhile for me. So as a broker, I have access to a wide range of lenders, banks, and building society that, again, depend on your situation. We can look at this lender, look at that lender. If you have adverse credit, we have lenders that specialize, we call them specialist lender, that will look at your individual case. If you can't pass on the mainstream lender, we turn to them to say, this is the situation. for this individual. I have this gives me this is I love what I do, and I'm not saying that to sell anything to you. It's just the fact being able to go down the rabbit hole in finding answer for my customer is what it's my reward on a daily basis, if you like. So your advance credit depend on what it is, and we can always see what's available out there, but it's not the end of the world. Having advance credit is a sign that you are trying. All right, so don't beat yourself up, but let's have a conversation. Let's look at what could be available to you, and we'll take it from there.
Nice. And someone else asks, if you already have life cover and have already defined your beneficiaries in it, do you still need to put that in a trust?
Okay, so you have life cover, you've already named your beneficiaries. So the process of naming that your beneficiaries, I believe is either you've done that through trust, which is one of the ways to name your beneficiaries. I don't think you can, unless you want to shed more light on that question, whoever is asking. But the process of you naming who is going to benefit from your life insurance is called trust process. I know some lender allows you to do a beneficiary form, which just states who your beneficiary. I think only one lender actually, only one provider actually. But the right way to do it is have it written into trust. What is the purpose of trust? Trust allows that the right money to go to the right people at the right time. And if you are to die and your life insurance is not written into trust, number one, nobody, if it's not written into trust, so who knows that you actually have the life insurance? And also, if you have your life insurance written into trust, at that point, you must have appointed, or you need to appoint a trustee. This is someone that can act on your behalf. The name, date of birth, address, contact details of your next of kin, your trustee, is already on file. So when you die, this trustee is not a stranger to the provider, because you've already supplied the name of this individual that the provider should deal with on your behalf. And the name of your beneficiary are also in your trust. So when you do it that way, you are rest assured that, yeah, when the time comes and you're no longer here, somebody knows that you have life insurance and their name is on the system with your provider that can act on your behalf. If you don't do that, you might go through a process called probate, which means if you are lucky enough for somebody to want to fight your corner that way, I know he or she has a life insurance, but I don't know. I've dealt with cases like this. They're sad when it comes to this situation, but I'm willing to help. But then it takes a longer, it's a delay process, because we need to know who are you to the policy owner. You are no longer here. So we are trying to do our best to certify and be sure of ways coming forward to make this claim on your behalf. And at that point also, if it's not written into trust, well, you haven't specified who should get what. So I'm going to get the whole money, or who's going to get the whole money. So yeah.
Yeah, I was about to mention the participants, the attendees, that feel free to raise your hand, and we're just going to give you the turn if you've got a follow-up question from that. So I can see someone with a hands up. Jolie, feel free. Yes.
Sorry, before that, there is a question still linked with the trust.
Yes.
Your beneficiary could be anywhere in the world, and same is your next of kin. But remember, when you are setting up your policy, you want to make sure, especially this trustee, somebody that will act on your behalf. Your insurance is in the UK. You want your trustee, your next of kin, to be able, your next of kin, you want them to be readily available to act on your behalf. You want your next of kin could be anywhere, your trustee could be anywhere in the world, and so are your beneficiaries. But one thing you should think of, I know some provider, there is a system of authenticating who your next of kin is if they are not in the UK. And even if they are in the UK, okay? If they are not in the UK, I know providers that will say provide their IDs. Remember, these are people that will act on your behalf when you're no longer here. As part of my duty to you, as well as for the provider, they want to make sure the right person comes forward in this age of cloning, everything clonable and whatnot. So it's the authentication. You could have your next of kin anywhere in the world. There will be ID and certification that need to go alongside that. And your beneficiary could be anyone as well. All right. So no issues with that.
Thank you. Jolie, do you want to unmute and ask the question yourself?
Yes, thank you. So I wanted to type it, but I can't really frame it properly. So the question is, you want to go to get a property, and the kind of property you want, you need quite a substantial amount of money. Okay, so you're waiting because you want to raise that amount of money. So the question is, would it be of benefit to just get any property, like move into a property so you can get on that property radar? Would that be beneficial at all, or can you actually wait for the kind of property you are dreaming for? That's my question.
Thank you very much, Jolie. That's one of the questions I asked. I answered every day, or I try to answer every single day. I should tell you, because of what it is. You've actually answered that question. Should you just get what is affordable right now, or should you wait? Well, I think if you ask me, if I were you, this is my popular saying, I make do of what is available until what is preferable becomes available. Okay, I will make use of what my money can buy right now. Again, we need to remember, before any of this decision is made, what is your individual situation? Okay, if you are 4 of you, for example, let's say it's a family of 5, and your money can buy 1 bedroom, you have to decide how is it going to happen. Should we just continue renting? Then we have room for everybody, or should we just buy one? This will be your decision. So as much as I would like to tell you this is what you should do, what are your options? Continue to rent, okay? And you remember, as long as you continue to rent, that's nothing coming back to you, okay? So if you continue to rent, that's money going, not your money. If you buy and you choose to sell your house on in 2 years, you will get something back. If you are renting between now and 2 years, you get nothing back. So that is the answer I will leave you with. But these are all on individual. I know what I would do, okay? Again, but depending on, it's 5 of us and 3 children that are teenagers. Yeah, we're not gonna be living sharing. Is it ideal for us to be sharing 1 bedroom if that's what our money can buy? Jolie.
Yeah, I know you've answered, but what is the benefit of actually getting a property when you know that this is not the kind of house I want to live in, but I want to be a homeowner? That's not really the house you want. What is the benefit of doing that instead of waiting, for when you have that, you're able to get the house I'm talking about?
Yeah. So the benefit will be that you are saving up. You keep saving your money. So if you want to buy a brand new property of 400,000, for example, it doesn't have to be brand new. Your ideal property is 400,000, but you can only borrow 200,000 today. Okay. But I would say, because it's a step in the right direction, I would be more inclined to say, go and buy that 200,000 property, because if let's say in 2 years' time, you are now in a good place to buy the property you want to buy, you will have some money to take with you in your current property. You borrow 200,000 today, you are paying some of it off. So in 2 years, you will take some more money with you. So you've increased more or less your deposit in 2 years' time. If you remain in a rented apartment, you're not taking anything with you beside maybe whatever 50 or 20,000 deposit that you have at that point in time. the advantage of you buying now would be that you increase the money, the deposit that will be available to you. You could be lucky. The property of 200,000 today could be worth 210,000 in 2 years as well, or 205, for example. So you have 5,000 pounds on top of what have you paid in that 2 years, maybe 5,000. So you have 10,000 to take with you instead of just 5,000, for example. So that is the benefit. You are saving for 2 years' time to look at another property option.
Thank you. Tina, do you want to go next before we read the other questions we've got in the chat? Tina, I think you need to unmute yourself. Oh, sorry.
Yes, I wanted to say thank you so much. Messages are coming in saying it's been very useful. So thank you in the meantime. I wanted to, again, remember this is not an advice session at all. And I think Stephen's done a brilliant job of making that clear and giving us very good guidance. But to Jolie's question, I wanted to just share a personal experience with that particular situation, which may not be for everyone, but it certainly was our situation that whenever we first bought our first property, we went for everything that we thought was singing and dancing. You know, we looked for the biggest possible house, and we had all these different criteria, but we were new to country. And by new to country, I mean we didn't understand the politics of areas, of postcodes, of many other things that go with, you know, with buying a house. And so a few years later, we decided we wanted to move. But the beauty of it was that by some grace, the place that we had bought, even if it was not our ideal home, like it was something that we later on found, no, this was not what we wanted to be home, it was great for rental. It was a very great rental property. So we managed to turn it into a buy-to-let. So we became landlords. And not only that, we managed to take out our equity out of it because we had been there for a few years. We had got some equity. Remember when you put a deposit down, that goes towards your equity anyway. So we didn't lose anything. And if anything, we became landlords. So Jolie, that's you know, to Stephen's point, if nothing else, you're not losing anything by having that property. And should the worst come to the worst, like, you know, let's say prices go backward by some very unlikely scenario, at the very least, you will have something that's rentable. So I always say, personally, my view is get on the ladder and then decide what your options are. At the very least, you'll become a landlord, you'll sell the place, but you're on the ladder and you're not putting money, you're not giving the money to our landlord. That money is going to yourself. But that's again personal experience and not advice. That's me. I'll hand back to you, Naikari.
So on that line, I think it fits very well. What is the current interest rate as of how is the current environment for getting on mortgages and the interest rates? How do you see the current market?
The current rate is, if you've never bought a property in the UK before, I say this to first-time buyer, interest rates will go like this. It's a wave, you know, it's up, down, it's just what it is. Don't get hung up on, the interest rate is high, I'm gonna wait till it comes down. Don't get hung up on that. What is the current situation in the market? For those of you that follows the Bank of England, the base rate, the interest rate, cost of living and whatnot, it's manageable, okay? We've seen better in the sense that we've seen rates in as low as 1%, base rate as 0.25 now, it's in 3.75 and that. So if you haven't owned a property yet and you are planning towards it, don't get hung up on interest rate, what the current interest rate is. You want to make sure it's affordable. A good broker will ensure that, walk you through everything you need to know. But in the course of your 20, 30 years of mortgage journey, you're going to go through ups and downs. But guess what? Year on year, you are building more equity. You are increasing your money in that property. You are borrowing less. You are increasing what you have. So that is the current interest rate. It's still manageable, and people are still buying.
Yeah, don't hang on to one specific moment. And what about like the variations depending on the type of visas that we might be holding? Is it possible to what type of mortgages can we get depending on the visas?
Okay. Excellent. So if you've lived in the UK for 2 years, minimum of 2 years in the UK, and and you have skilled worker visa, um, skilled worker visa, leave to remain, EU settlement scheme, and that set of category of people, as long as you've lived in the UK for 2 years, you should be okay in majority of the market. By the way, different criteria, okay? You need to be on, the first thing you should know is you need to be on a visa type that allows you to work unrestricted in the UK, all right? You cannot be on a student visa and nobody will look to lend you anything because you do not have the right to earn unrestricted in the UK just yet. But the moment you cross that visa category and move into skilled worker, leave to remain, and EU settlement scheme and all that, and you've lived here, I'm saying minimum of 2 years. That's because that will bring you, if you've lived here for minimum of 2 years, that will bring you into the market for lenders that can potentially borrow you up to 90% of what you are looking to buy or what is affordable. Okay, you can come into the market for that. Now you could, there are lenders that will consider you if you've been in the UK for less than 2 years, but will be requesting that they can only borrow you up to 75% or 80% in some cases. But no student visa, but anything else that allows you to work or do business in the UK can be considered for a mortgage.
Nice. And then I find this an interesting question as well. Can you buy property in your name if you are married? So say if your spouse doesn't want to be a homeowner, can you still buy property and be a homeowner?
Oh yes, I mean different reasons you could buy property. Couple can decide for only one person to go on the property for various reasons, but largely it could be to do with credit. One of the parties' credit might not be good. For that party to come on the mortgage means they don't get anything at all. So in that case, in situations like that, it might be wise for just one of them to get the mortgage on their own, just on their own names. Yes, so it's possible to do that.
Thank you. And someone is asking for your opinion, I guess, or whether you would suggest buying a new build or an older house in terms of value for money.
Well, this is subjective. Absolutely. Some people like to have brand new and the first to live in this property. Some people like old building with the shapes and size of probably. This is one thing I'm going to say is number one, is totally up to you, your complete decision. And some people will say to me that new property with small rooms, well, it depends on what you are buying and where you are buying. And some people, the argument is there, but it's totally your decision. One thing I will say, though, when it comes to buying newer property, new build, is because you are now using modern material that makes it more energy efficient. So the cost of running your home versus versus a property of 1950 might be cheaper with a new property. If, like for like, you might find it more cost effective. Not really cost effective, efficient. You are spending less with new property than old building, which might not have the modern insulation or modern material for build. That is the only argument I can put down, but it's totally subjective to you. I've had argument from clients that wouldn't go near a brand new property, and equally some that will say no, brand new property with everything, they want to forced to live in it, and also with the energy and energy side of things.
Yeah, things to consider. Yeah, yeah. Thank you. Another question is, do you need to have seen the property you would like to own before you start the mortgage process?
No. So there's nothing, Jolie, there's, hey, keep dreaming. Absolutely. Don't stop dreaming, right? But there is no point looking for a property when you don't know how much you can borrow. So it's always good idea to know how much you can potentially borrow to buy before you now start looking for property. That's how I think it should be done. So you know what you can buy, and when you're not wasting your time looking at property that you're not going to be able to take a loan on. That will always be my advice and my strong counsel.
I can see Ella typing a question, but in the meantime, I wanted to tap in on another one, a little bit going back to the different schemes that you mentioned earlier. For someone just starting, might not even know where to look for information to know what could be eligible for, like what schemes or different initiatives could I be eligible for? So where do we start? Where do we start looking for those government assistance? What are the steps?
Okay, I think there is a particular company that actually handles most of this for those in Scotland. It's called Link Housing Association. They sort of like where to start really speak to your broker. To be honest, the broker will, like myself, will be able to tell you, oh, wait, let's say, okay, you meet this criteria. Maybe you might be able to consider, you might be eligible for some schemes that is out there, lead scheme, first home buy, shared equity, and the likes. So that is where to really start. Speak to your broker, and also you can go online. At least an average of us can navigate through Google, type in government schemes, and it will link you to companies that maybe you can get more information from. But your broker, this is why we are here, to be able to say, okay, these schemes are available, and these are the one based on your situation that you might be eligible for or not.
Yeah, head to the experts, basically. Nice. Ella is asking, I guess, well, you frame it as advice, but I'm gonna reword it maybe. What are the alternatives for a home student instead of paying for student accommodation over 5K yearly to get a mortgage? Are there options for students?
So you are a student, so you are not really earning. Your day job is being a student. So again, if you are a home student, meaning you are saying I'm British, so I'm a home student, I believe. If that's what you mean, instead of paying for student accommodation, are you earning any substantial amount that you can borrow that can allow you to get a mortgage? That's a question we need to answer.
And I don't know if we've got more questions coming. We are going to wrap up very soon because we did run a little bit over what we said. Tina's suggestion, what about guarantors?
Yeah, good shout, good shout. I was just thinking that. So you have guarantors mortgage. As a student, your parents can come on the mortgage. Your parents' income will be used to get you a mortgage. They're going to be, so that's how guarantors mortgage work. But what you should know about guarantors mortgage is, let's say you are 20 years old, okay, and your parents are buying for you. And so your parent income are going to be used, and let's say they are 50. So the term of the mortgage will be based on your parents' age. Yes, they can buy you a property. I've had few, I've transacted a number of business in that regards with parent buying. And yes, some of these students maybe actually have some what you call children's account that's now mature and want to use the money as a deposit towards the mortgage. Yes, you come on board. the parent buys for you, and then when the time is right, you are earning, you can kick them off, and then you take the mortgage on full. Yeah, guarantor's mortgage is a good one as well.
And maybe just as a last one before we wrap this up, regional variations, how do they affect like the variations in property prices and demand? How do they impact when applying for mortgages?
Regional variations, I think so if you live in London, for example, lenders might use London weighing. If let's say you live in Scotland, let's say you earn 50,000. You earn 50,000, and in Scotland is just you have city weighing that goes with everything. You earn 50,000, and the amount of loan you can borrow if you were to be in Scotland could be slightly less than what might be the case if you were to be looking to buy in the London region, for example. So, but don't get hung up on that. Don't get hung up on that. It's all about where you're buying and what you're buying. Across all the financial institutions, you always have this city weighing and stuff like, just to mirror the sort of environment it is, but you are not in disadvantage whatsoever, because you can imagine having 500,000 mortgage in Scotland. I'm not sure what that will get you. You could have a swimming pool with a 500,000 property, and not in Edinburgh, maybe in one village in Scotland, but take that to London, you might be lucky with a 4-bedroom standard house.
Okay, thank you so much, Stephen. That was phenomenal. Yeah, very, very thorough. Before we finish, I want to let me go back to the slices. I want to the slides, not the slices. Yeah, share with all of you. Well, I'm gonna leave some polls here while you are still on the chat, on the meeting. Not this one. And I also want to share with everyone that the next 13th of April, on a Saturday, we're gonna have there is going to be a book launch at the National Library that ties very well with all this webinar conversation mortgages and how to navigate finances as a newcomer, as a migrant. So you are all more than welcome to join that. You will also be able to find that event on Moneymatic's community. Yeah, we're gonna be posting this record. We've been recording the webinar, and we're gonna be posting it on our channels, on Moneymatic's channels, once we've edited it. Thank you so much to Stephen for joining us and for answering all of the questions. I don't know if there are some final questions. Let me see if I missed something here.
Right. Well, the final question, let me leave my final thought, if you like. When it comes to mortgage process, okay, the best you could do for yourself is to speak to experts. You might have friends that have been through the process. They've gone through the process of homeownership. That could be last month, but the experience of last month, even the fact that it's an individual experience, that doesn't mean it's going to be the same situation for you. So in any case, not what they say. I'm not saying anyone is misleading you, but the best you could do for yourself is to speak to experts that will guide you stage by stage through the process. Don't try to rationalize it. Don't try to say this is how it went for my friends, so it should be the same for me. Hey, until you know everything, then you don't know everything.
Yeah, and you don't know what you don't know, and the experts oftentimes do know what they're talking about. So yeah, thank you so much for that last intake. Thank you everyone for joining us. Remember, we'll be posting this webinar, well, the recording of this, maybe not tonight, but hopefully sometime this week, and you'll be able to get all of this information at your own time as well. Thank you.
Thank you.
Thank you. Bye-bye. Have all a good evening.
Thank you for listening to the Grow Your Money podcast. If you're looking to take actionable steps toward achieving your financial goals, visit moneymatix.com. That is money, MATIX.com. And join our free Grow Your Money Challenge. Let's unite in the movement to inspire people to talk about money. Thank you for being a part of our community. We'll see you in the next episode.